My name is Michael Elliott, and you're at the session on the G20 and global economic governance. So if you want to be at some other session or you think you're somewhere else, now's the time to move. We've got an absolutely spectacular panel to look at questions of global economic governance. A real delight to see such distinguished people on the platform with me. I'll very briefly introduce them. I won't waste time doing long bios because you have all those in your materials. Marie Elka Pangestu in the middle, Minister of Trade of Indonesia, and one of Indonesia's most distinguished academic economists, I should say, too. Tony Clement, Minister of Industry of Canada, who overcame the disadvantage of being born in Manchester, England. I'm from Liverpool, so I can say that, you see. My old friend Zhu Min, who's next to Minister Pangestu, now Special Advisor to the Managing Director of the IMF, and of course, very well known as a leading figure in the Bank of China and the People's Bank of China before that, and indeed the World Bank before that, now I come to think about it. Martin Senn, Group Chief Executive Officer of Zurich, and hosted a wonderful dinner that many of us were at last night. Thank you, Martin. And Tiankai, Vice Minister of Foreign Affairs of the People's Republic of China on my immediate left. Minister Pangestu, I was in Seoul for a couple of days last week talking to officials there about preparations for the next G20 summit, which is in mid-November in Seoul. Everyone getting very excited. On the Korean team, working on the program, thinking of the agenda. What do you expect to come out of Seoul, and what would you like to come out of Seoul? What are your priorities?
Thank you, Michael. I think in terms of what we expect to come out of Seoul and what I would like to see come out of Seoul, in terms of what has been stated is that we must see the commitments that they agreed to in Toronto to be delivered. And a lot of that has to do with the IMF quota reforms and the governance having merit-based management and more participation in the governance by the emerging economies. And I'm sure there's going to have to be a discussion on coordination of the macroeconomic policies again, because now the most recent IMF economic outlook is not looking so good. Second half of 2010 and first half of 2011 is likely to slow down. So what are you going to do now with the stimulus exit and so on? There's probably going to have to be a discussion on that. Mutual assessment process in the context of the framework for strong, sustainable, and balanced growth, and a lot of the financial reform agreements. But for me, being the trade minister, what I hope to see come out of Seoul would be on the trade issue and the development agenda. Because for the trade aspect, I think we succeeded in having a very good discussion in Toronto amongst leaders. I mean, you can imagine how difficult it is to get leaders to talk about something as rather technical, such as the Doha round of negotiations. But right now, what we do need is a political push and a political commitment from a number of the major leaders to do a little bit more. You know, we think what's on the table is already, depends who you talk to, 70 or 80% on the way to completion in the negotiations. We do need to do some more, but not a lot more, but this requires the required political push from leaders. And we were asked to report on progress. Ministers of Trade were asked to report on progress in Seoul. There has been progress in Geneva-based negotiations, but it needs that one more push so that we can really complete in 2011. Finally, on the development agenda, I think that's very important. This is the first time the G20 is being hosted by a developing country. It's one of the emerging Asian countries. So the development agenda, I would hope, would get to some completion on two fronts. One is the global financial safety net, which is something Korea and Indonesia have supported since 1 year ago, and IMF has also been involved in it. It's basically the second line of defense for developing countries, which in a crisis can have things turn around in a negative way very rapidly just because there's a huge capital outflow where problems are outside of the country itself. This is what happened to us in 2008. And how to have the second line of defense to alleviate a balance of payments situation like that, as well as we think it should also be allowed to be used for budgetary purposes. And that's for the short term. We hope this will be realized at the Seoul meeting. And there has also been the creation of a working group on development cooperation within the G20 framework, which talks a lot about infrastructure, about social safety nets, which are a very key part of dealing with crisis, and a number of other development issues, which we understand France has agreed to continue to next year. So I think the realization of the working group on development will be very important to also ensure that G20 doesn't become an exclusive club, that it is thinking about the non-G20 members and the development issues out there.
Thank you so much. One of the things that I want to make sure that we get onto in this discussion is the extent to which the development of the G20 since the crisis erupted 2 years ago, or since the most fervent phase of the crisis erupted 2 years ago, reflects a shift in relative economic power throughout the world, and we'll definitely get back to that point in a minute. Minister Clement, though, Toronto has been mentioned approvingly, I would say, a number of times already. So what do you look to Seoul to do to complete or take forward, if you like, some of the discussions at Toronto?
Michael, we were very pleased with the deliberations in Toronto. We felt that, as you alluded to, the G20 as a heads of government mechanism has come a long way in a very short period of time as a result of the economic crisis, perhaps, but certainly that's our observation. So I think what we see coming out of Seoul is the need to continue in a stable environment, continue the job that was outlined in Toronto when it comes to debt to GDP ratios and other targets, improvements on financial institution governance. We're seeing certainly some green shoots with respect to that. So that is going to be important. At the same time, the whole point of and the whole relevance of G20 has to be around its ability to be nimble in changing economic circumstances. So yes, we have an agenda coming out of Toronto, but in Seoul, I would expect that there would be a review of the timetables, a review of the targets, to make sure they are still relevant, that they are still doable, feasible, and still appropriate. There's no question, since Toronto even in that short period of time, it's clear that not all countries are meeting the targets that they aspired to even just a few months ago. So I think the nimbleness of G20, in order to remain relevant, has to be also something that has to be exhibited in Seoul.
Shibin.
Yeah, thank you. First of all, I have to say it's a great feeling to come back to China.
Yeah.
You mentioned currently in DC now. It's very nice to come back to Tianjin and to this forum. I saw a lot of friends here, so I will take this opportunity to say hello to everyone here. And particularly, I saw my previous boss, Chairman Xiaogang, is here. And it's great, but also you gave me a lot of pleasures. And sort of I'm going to report to you. For Seoul, I will say, obviously, Maria gave a very general description, almost cover everything. But I would like to emphasize one thing, that's the reassess and review the global financial sector reform. It's very interesting. Currently, we saw piece of working is going on everywhere. We thought American passed the bill, right, in the July 21st.
Right.
That's a Dodd-Frank bill. We saw UK have a proposal. We have EU have a framework reform proposal as well. But this seems to me is a one level focus on the national level on the systematic risk management, right? Too big to fail. Then we heard yesterday the Basel. Basel is very much focused on Basel III, focused on the capital issues, on the liquidity issues, the leverage issues,
right.
Very much micro. We have another element here, which is FSB. FSB is very much focused on standardize the principle and the code and promote the global cooperation and propose the global-wide regulatory framework and to eliminate sort of arbitrary of the regulations. Now, this is three things, but it's not all clear yet how these three things are working together.
Right.
I think the whole thing started 2 years ago, G20 in Washington, right? That's because the crisis just come out, and it's obviously important for the G20 focus on the crisis, on the regulatory frameworks. Now, 2 years passed. I think a career meeting should be a very important meeting to reassess in the past 2 years how far we have gone, how much we achieved. But most important thing, I would say, among these three pieces of things is a lot of things unclear, a lot of uncertainty is there, particularly from business communities. People talk about the regulatory uncertainty. How do we move forward from current different pieces of things to go to the coherent global regulatory architecture rebuilding? I think that's the job of G20. G20 should push, should lead, and should bring the whole thing move forward. I would say Korean meeting will be a very ideal place to summarize in the past what we have done in the financial regulatory framework and to move forward and to give a guideline.
I think, Martin, that throws the ball very, very nicely to you as one of the world's leading private sector financial service, insurance services companies. I'd like you particularly to pick up the word risk that Jimin was just using now. As you look at the last 2 years, since Lehman Brothers, since mid-September 2008, do you think that all these discussions among political leaders, among top officials at the international level have reduced the risks to the world economy? Is the world a safer place now than it was before?
That's a big question, Michael, and has it reduced the risks? Probably not. But the question is, how is it going to manage the risk moving forward as we know them? And I think the fact that we have now emerging countries and emerged countries within the G20 getting together, formulating a balanced view, assessing the landscape and the risk profiles is a very, very good step forward. But one should be realistic and accept that the risk is managed at probably more at a micro level, i.e. within national boundaries. Mm-hmm. You have in the US products, instruments you wouldn't have in this part of the world. So you wouldn't have a prescriptive basis within a G20 to deal with that. I think you really have to solve the problem bottom up, and that is you have a strong national regulatory regime within the banking and the financial sector. What the G20 can do and probably will do effectively is to set some minimum standards, to get an agreement on definitions. We have seen yesterday there was an announcement with regards to the proposal out of Basel III. This is exactly what probably will follow up with, but the implementation, the management of the risks is got to be done in the different countries and different geographies and cannot be dealt with globally, as the nature of it is totally different.
So some of the more blue sky suggestions 2 years ago that the crisis should lead to a sort of global economic governance structure, if you like, overestimated, in your view, what one can do internationally and took one's focus away from what one has to do at the national level. Would that be a fair assessment?
Yeah, I think so. Clearly, I mean, the reaction after the crisis we have seen is pretty natural.
Right.
You tend to respond with some aggressiveness, maybe with some illusions. And as time goes by, and with that, you get a better feel on the magnitude of the risks, the cause of the risks and the issues. One becomes a bit more sensible and probably more balanced. And that's really what is happening now. That's a good process. And I think the G20 will help in dealing with the risks as we have seen them. But keep in mind, any regulatory change is always addressing the risk we have seen.
Right.
Any new regulation is regulating the last crisis,
right,
and is not forward-looking, preempting any different development. That's why I'm a little bit cautious with your entry question. Are we going to have a world without any risks as we move forward? I think the agenda for the G20 in the coming years will not be less interesting than it is now.
You wanted to come in?
Yeah, and a slight different the view with Martin agree differently. I think the first issue is assess the risk. I would say, because Martin say, that in 2 years the risk does not reduce. Actually, I cannot agree with that one. I think in 2 years, I would say risk has been significantly reduced global-widely, because we was almost in the edge of the meltdown, the whole financial system, right? So that systematic risk has been reduced. And if you're looking for the capital position today, it's much better. If you're looking for the funding structure, right, I think the funding structure is much better. Liquidity go back to market.
Right.
And even with the European crisis, we saw some sovereign wealth, sovereign debt issues, but still, I think overall. So I would say overall risk has been reduced, but obviously there are new issues, particularly with the sovereign risk issues, a few others. Uncertainty increased permanently to the market because it's a new issue. But I think we should give the credit to G20 and to the global cooperation in the past 2 years, and to all the government in the different countries, and particularly also to the financial sector as well. The second issues I also would like to emphasize the importance today for both at the country level regulatory framework and the governance issues, and at the global level governance issues. I say we live in such a world, such an interesting world. It's very much on the country-based, boundary-based, but also everybody is linked to each other. We cannot ignore either side, right? So I will say the global governance is absolutely important today, even than any time before.
Right.
So that's the reason we put a lot of pressure, put a lot of hope on the G20. We hope the G20 mechanism will work.
Well, Tiankai, let me come to you on that one. If there is one thing that everyone agrees with, as you look back over the last couple of years, it is a sense that the center of gravity of economic power in the world has shifted to Asia. That's sort of a given that everyone understands, or is shifting to Asia. As you look at the G20 process, do you think, and global governance issues, do you think debates, discussions, and proposals adequately reflect, so far, the extent to which the world economic center of gravity is shifting to the east?
Well, I think the shifting is still taking place. It's still going on. But there's a very clear trend that we can perceive. I think for the G20, you see, I'm the China shepherd for G20. For the G20, if we look at the composition, this is quite new and quite unique. Never before have we had such a grouping of countries where the emerging markets or developing countries account for about half of the membership.
Right.
I think this is a historic step forward in the right direction for a more equitable and more balanced, more representative governance body for the global economy. We have 6 Asian countries sitting in the G20, and they are playing very active role in the process. And then if we look at the economic performance of these countries, generally speaking, I think Asian countries are doing relatively better than some of the other countries. And they are also contributing more and more to global economic recovery and growth. So I think it's important for the G20 to draw on the experience of these Asian countries, to focus on the changing circumstances and the new realities of the world, rather than to follow some of the outdated theories or prescriptions of the past. I think that this would be a lasting contribution Asia would be able to make to the G20 process. And in this regard, I would like to echo a very good point made by my fellow panelists, which is the completion of the quota reform of the IMF. With all due respect to the IMF, I'm quite sure the completion of this quota reform will greatly enhance the credibility and effectiveness of the fund.
So at Toronto, there was a sort of commitment. I don't want to spend 10 minutes on quota reform because we'll lose some of the audience, I suspect. But in Toronto, there was a sort of commitment to do a 5% shift in IMF quotas, correct? Right. Are we going to see it? Are we going to see a deal done in Seoul?
You mean me?
I'm asking anyone, but I'm sure you're the only person on the panel who works for the IMF. So.
Oh dear.
If I may just add to your question.
You're being saved.
No, I'm not answering. I'm asking him an additional question.
Oh,
Because
wow.
there is
side.
the IMF meeting in October,
Right.
prior to the
Right.
Seoul
October
meeting.
8th.
So that's why the November deadline, actually.
I think it is absolutely important when we talk about global governance and to talk about changing international financial institutes, reform, including the World Bank, IMF, and a few others. And among those reforms, obviously, the quota is the most things at the top of the whole things, right? The meeting, the G20 gave a mandate, asked to transfer 5% quota from overrepresented or advanced economy to under or emerging market. And we're working on this program, and we are actually working very hard. And the difficulty is, and the 5% is not enough. And the increase here is relatively easier, but the decrease here is relatively difficult. So that's the things we're working on. So we're working on it. We are very much hopeful we'll be able to reach these targets by the Korea meeting. Because previously, mandates was asked to get things done and early next year, but the Korea G20 asked us to move faster forward to get things done by the Korea G20 meeting. We're working on that target, but we need a lot of support from outside. But before that, let me say a few things others. I think it's also important or equivalent or even more important. So when we talk about the IMF reform, the quota reform is absolutely important, but also there's a voice reform. There's a representation issues. How do we balance the people, for example, we call it staff diversification,
right.
Whether the different regions and asset groups have a proper representation within the fund. I think this is also important. How do we form a more effective, the voice mechanism, get all the voice, as Minister Trey mentions, get all the sorts, not only from advanced economy, but also from emerging economy, I think also is an important issue. But there are few issues we at the IMF also working on to change ourselves, to change our mandate. For example, there are a few things very important. We do surveillance. Right? We do Article 4, we do FSAB, it's very important surveillance. But how do we move this surveillance from bilateral to the multilateral? How do we improve the quality of surveillance to make our country, member country, better? And this is also important issues. And how do we make sure our lending facilities from after the crisis, post-crisis, afterwards issues, do the prevention?
Right.
So that's the reason we work very closely with the Korean government, try to build a sort of financial safety assistance. And we currently, the board just passed a resolution to allow us to build a system we call the preventional liquidity facilities, which I think is more important than the afterwards things. So there's a lot of things changing within the IMF itself. And obviously, we need the guideline from G20, and we need the support from all the G20 members as well.
Tony, you wanted to come in?
Michael, one of the things I find fascinating as we are in a period of transition on some of these world financial institutions is that there is an implicit or explicit push and pull. Yes, we see these institutions becoming more inclusive, and there are demands for change about the governance and the procedures used in those institutions, whether it's IMF or the G20 itself, from the new entrants. But at the same time, maybe this is implicit, I think it's explicit, at the same time, for those new entrants who wish to pay for say, there is also a responsibility by those new entrants to not only help shape the new order, but also to abide by those rules. And so that's that. I'm merely making that observation. That's part of the dynamic tension that will play itself out over the next few months and years.
Just before we leave this topic, who on the panel thinks that member states of the European Union have an overrepresentation in international economic decision-making? Anyone? Oh, thank you. 2 hands go up.
I think
Yeah,
that's
thanks.
the majority view of the G20 members, maybe with the exception of the Europeans themselves.
Yes, I don't think the Europeans share that. But Minister Pangestu?
Yes, I think this has been discussed a lot because in the G20, the Europeans are represented by Europe as well as a number of European countries, and that doesn't happen in any other international governance system. And I think Africa is underrepresented in the G20. So I think the balance, this is a lot of the discussion when we talk about the effectiveness of G20. Representation is one, and then how do you get representation from outside to get voiced into the G20?
Could I, as a non-European, non-Asian, intervene as a North American and maybe just put this out there as a devil's advocate? But the issue about the Europeans is we still have nation states.
Right.
In order to fix some of these issues, you still, at the end of the day, have to get a nation state to do things. European Union aiding the Eurozone still needs Greece to live up to certain expectations and promises. So I don't think you can, it's not an either-or situation.
That's actually the point that, Martin, you were making right at the beginning, that you need, in the end, you need strong regulatory, or you need developed regulatory regimes in individual nations to make all this work.
Absolutely.
However, you are the token European on the panel, so...
I'm actually Swiss. Just to remind you, so
The Swiss now belong to Europe.
and we are pretty neutral, as you know. But just to make that point again on the regulatory part, nevertheless, on the representation, I think it's a great step forward as we have really a balanced view between emerging countries and emerged countries. I think the process and the experience in the discussion will sort of diversify this potentially further, but it's a good step forward to have this balance between sort of the two poles of emerging and emerged places.
Tiankai, come back. Yeah.
Well, thank you. I think I have to make it clear that we have no prejudice against the European countries. But when we have a grouping of limited membership, we have to consider a proper representation in the group. Africa is certainly underrepresented in the G20. We have to give them more voice. We certainly welcome the European countries to contribute to the process. But you see, we spend a lot of time at the Shepherds meeting discussing how many European countries we should have. And sometimes we are even confronted with a very challenging issue of whether we should allow 2 Europeans sitting in one chair.
Oh, I'd like to see that, actually. I'd like to see that. Right.
But anyway, I think we have to give full consideration to the concerns and needs of African countries, of other developing countries, for instance, the least developed countries, small island countries, countries that are not members of the G20. Countries may not hope to join the G20 even in the future, but they still account for 90% of the countries in the world.
They need to be, and their voice needs to be heard. Their interests need to be represented. Structures need to be found to do that. Let me just shift tack a little before we go to a Q&A session. Tiankai, you said something very, very interesting, which I wrote down. You said that in this process we need to get behind, and I'm going to quote, the outdated theories and presumptions of the past. Xiumin, let me come to you. You and I have discussed some of the sort of intellectual background of the global economy at opening day sessions at Davos over the years. Has there been a sufficient intellectual shift in the last 2 years in discussions at the G20 and other fora to recognize that certain outdated beliefs, theories, and assumptions got us into a crisis, and that we have to change our mindset now?
So that's, thank you, Michael. And this is an absolutely important issue. I would say the crisis actually caused a lot of concern, rethinking of sort of global sort of wisdom about economic developments and the financial market as well. For example, before, we always believe it's a market efficiency theory, right? The market always works fine. So that's always the game between the regulator and the market. But this crisis say there's a regulation failure, but also a market failure as well. So those very traditional wisdom now facing serious challenges. I think that's everybody realize that, and people try to see how do we fix that whole thing. If you go further, I think really a lot of things we don't understand. For example, we'll talk about macro finance. We don't understand very much financial sector supply and demand, because in the previous classical Keynesian model, we only have a money supply and money demand. We don't have that section at all. We don't understand intermediation. What is the function and what is the interaction between the financial sector and the real economy? Right. So this also crisis tells there's a lot of things we don't understand. A lot of Western classical theory does not give a proper answer to the issues. I think those challenges has there, people realize that. Now, how much the thought and the wisdom shifting from the Western to the Eastern side, I would think that people realize there are a lot of ideas, as Minister Tree mentions, and the things and the methods and the experience and in the emerging market works quite well in the past, say, 10, 20 years. Now probably it's time to give more attention and focus to study those things, bring them to international arenas. But I would say it's still in a very, very early stages.
Right.
Give you a very simple example. Everybody today talk about macro-prudential management, right? Talk about the expanded toolbox of central bankers.
Right.
But in fact, if you're looking for the Asia, India and China, both the central bank uses sort of macro-prudential instruments a long time ago. So there's a reason to maintain the financial sector relatively stable. And there are a lot of things was to summarize, was to study, and then bring to international arenas. Increase the voice, and particularly bring the emerging markets, Asia's wisdoms and experience to international arena. I think it's absolutely important issues.
That's a really very, very interesting observation. Minister Pangestu, Marie.
Yeah, I think some of the thinking has changed on a number of issues. I think this irrational exuberance, letting the markets work versus regulation, this is going to be a continued debate. And I think at the end of the day, it can't be either or. It's going to have to be a balance. But you are, I think what you said earlier from Zurich, yeah?
Martin.
Martin, was very important. You are always working on regulation for the crisis that just happened. But forward-looking, you're always going to have battling with asymmetric information. So the forward-looking part, we should not forget. While we are regulating the past financial crisis, and this is not the last financial crisis we're going to have. I think we should never be complacent on that. There can be something else coming up, and this is, I think, what we need to be aware of. And it takes a long time. I mean, we went through a financial crisis. Korea went through a financial crisis. It took us 5 to 8 years before things get normal again. Maybe in a developed country like Europe or America, it will take a faster turnaround, but it will still take time for you to get back to normal lending and reducing your risk aversion. But I would say outside of the financial sector issues, on the trade and development front, there's also this big debate going on, export-oriented versus domestic-led growth. Again, at the beginning of the crisis, when we were looking at this, said, oh yes, we now have to go back to domestic-oriented.
Right.
Let's forget export-led. But now we've come back to a more rational discussion where it's not either or. It's going to have to be both. And what's happening in East Asia is actually a more nuanced debate where it's no longer export-oriented, where we're producing and exporting to third country markets, which are Europe and US. But we're now exporting more within each other. We are consumer goods and domestic-led growth, which is in Asia, is going to be another source of growth for us. And this is why greater economic integration, through making sure the WTO system works. The Doha round is going to be your costless stimulus for growth, trade and investment growth to be continued under a WTO and a Doha round, which is going to give you a whole lot more room for trade to grow, as well as the regional integration and regional economic agreements that are going on right now. So I think that's on the trade and development front, which is very important also.
Tony, and then I want to bring Martin back in.
Learning the wrong lessons from the last couple of years would be as tragic as what we have gone through in the last couple of years. So I would encourage us not to throw the baby out with the bathwater with classical, speaking of classical liberal economic theory. Again, I'd like to cite Canada, if I might, and say that Canada is a free market economy. It trades with the world. It had, we believe, the appropriate financial regulation of financial institutions, which avoided some of the traps that other nations had to grapple with over the last couple of years. So there is a way to have growth and trade and market-based policies with the appropriate level of regulation, even in the world that we inhabited just a couple of years ago. And I guess part of the challenge is spreading that out and evening out some of the bumps along the way. So I would just encourage us not to learn the wrong lessons. And I think the minister's point about how we have to continue to encourage trade, encourage new trade relations, encourage new trade agreements, avoid at all costs protectionism, which can really throw the baby out with the bathwater. I think that's part of our agenda for the next few years.
Martin, do you want to come in on this point?
Well, just to maybe add to what Min Chu and Minister Pangestu has said on the experience of the crisis, and particularly as well the regulatory response. I think one has to be extremely sort of mindful about the fact that any regulation has an economic cost.
Right.
And it seems to me that the Western world, at least initially, has been its intention, responding pretty strongly with some regulatory ideas which, on the one hand, are simply not possible to implement, at least not for global corporations, because you have always to deal with local legal frameworks. And on the other hand, I see that this part of the world is behaving totally different as it's still emerging in a more sort of a balanced, phased view to open up the markets. And the big risk is that these two poles sort of go in the wrong direction, i.e. that we will close markets in the West versus opening up, and I'm talking financial markets in this part, which is extremely important, because think about issues like future pension and how to deal with issues like aging generations, and how do you provide respective pension solutions. If the financial markets are regulated in a way where capital markets are not functioning anymore in an effective way within constraints, then you might have a problem in dealing with just the pension-related issues. Right. And one has always to be in mind that regulation has to be done under consideration of facts, which do not then create unintended consequences. And you mentioned at one point, Michael, 2 years ago, there was a bit of a hype in terms of getting a global solution in place. I think it has been really, the attitude has changed totally, and is much more sort of balanced. I think if we get to a phase where globally we can agree on some standards, on some limitations, on some principles, but then still agree that it has to be within different sectors, within different countries, implemented, tailored for these countries, that would be a perfect sort of way forward. I don't think it's the answer to all the problems, but definitely a great step forward. And Canada is one of these great examples, which is really standing out in terms of how it has prevented the crisis, not mastered the crisis, but prevented to get any deeper with the financial institution in this country involved.
So much so that Time magazine made the governor of the Central Bank of Canada one of the Time 100 this year First central banker ever to make the list, I think. Questions?
Wait. Why Mark Cameron, not Zhou Xiaochuan?
Well, good question. Actually, I can't answer that. I can't answer that. Let's go to questions. Actually, Bill, Bill Rhodes, right at the back. Please identify yourselves and then ask away.
Thank you, Mr. Chairman. Bill Rhodes, Citi. I think the panel covered the subject very well. Specifically, I'd like to ask Zhu Min and Martin Senn a point about the upcoming meeting in Seoul. The whole idea on the regulatory side was that we would have international regulatory standards and international accounting standards agreed upon through the Basel Committee, which came out with some conclusions a few days ago, and the Financial Stability Board. The problem is that the coordination and cooperation, which has been set forth in all the G20 meetings, may or may not happen by the Seoul meeting because a number of countries, including my own, Dodd-Frank bill, have already moved ahead. And do you really think that we're going to get that consensus and the ability to implement on a similar timetable because we're in global markets? And specifically on international accounting standards, no progress has been made. We still have the International Accounting Standards Board on one set and FASB in the United States on another. And the head of the Deutsche Bundesbank, Axel Weber, has often said you cannot have international regulatory standards if you don't have international accounting standards. And I'd like you to comment on that. And then just one final point. I think the Minister of Trade from Indonesia is right on. We cannot forget trade and development. And we in the Asia Society are preparing a paper on this subject to present to the G20 meeting in Seoul. Thank you very much. Xi.
Thank you, Bill, and it's a beautiful question. But I thought you gave the answer already, and you show your concerns, right? And which is very much relevant. I think the beauty is in the past 2 years, under the leadership of G20, all the regulatory bodies, all the country authorities tried working very hard to pull things together from different directions. As I mentioned, there's 3 different levels, from national level, BIS, micro, and from FSB to promote international cooperation. But there are a few things that's very clear. Number one, we have a pretty good framework, but that not have all the detailed guideline principles. The market is still a little bit of confused. Don't know, how do we follow this reform, behave the financial sector itself within the boundary of the market and the new regulatory framework. I think it will take a long time. Take just the Dodd-Frank bills. And in the next few years, they are going to issue more than 236 new regulatory guidelines just for the time being. I guess with the time moving on, they need more and more issues. There's a lot of things going on. There's a long, lengthy negotiation between the market and the regulation as well. So a lot of details are not all clear yet. I think that this is a big issue. The second issue is you're absolutely right. When the few countries put the legislation first, put a framework, and others may not, and how those different countries and cooperate in a very much international standard the basis. I think this is quite a big challenge because today the financial sector is very much integrated, and particularly for a bank like a Citi, you spend all your life work for. It's very much international financial institution. You're everywhere, right? How does the local regulatory work impact your daily business? How does we can work together? I think this is a big issue. Because of those issues, I will say it's much more important we need the G20 to lead and to review and to push the whole thing forward. I will say this is not the end. It's just the end of the beginning, right? I will see the financial sector regulatory reform go through a pretty good phase, but we just reached one step. There's a long way to go. We need the G20 to lead and to push the whole thing. And particularly under the G20, I would say FSB play a very important role to standardize and the code and the standards implementations They do the maps, they do the peer review, those things. I very much hope those things will work out because at the end of the day, for financial sector per se, we need to globalize the standards code. We need the global regulatory corporations. So, but also we very much hope in the Korea meeting, the G20 will move the whole thing forward. But of course, we cannot dream the whole thing will done overnight.
Martin, do you want to come in?
So, yes, just to add and maybe response to Bill. First of all, we should not lose sort of sight on the fact that the private sector and the public sector got together in this crisis. And I think everybody's in agreement. It's not the public or the private sector which has done things wrong. A lot of things have gone wrong, from regulation to wrong incentives and so on and so forth. So with that, the private and the public sector also has to get out of this crisis together. There's no way that one party can do it alone. It needs to be done together in a measured and well-balanced way. Now, to your specific points and with this sort of preamble, I think on the sort of financial reforms, everybody's in agreement that probably financial agents, banks, insurance companies, which are undercapitalized, that they need more capital, that they probably need more liquidity, that they have to be more transparent. I think we agree on those principles, but we got to be very careful that one is not going from a principle-based sort of regulatory regime to a rule-based regulatory regime, which becomes then very, very prescriptive and would be a big step back. I think that's one big risk. And here I would like to make the point to what you're referring to with changes in the accounting world. This is still very much of a jungle. And I think there's a fair amount of try and error taking place now. But we also have to come to the point where if you need more transparency, then one has to say we have to accept that, for example, balance sheets are marked to market. And that with that, they're reflecting the true economic value of any assets in any balance sheet, rather than try to model the value of assets around it. And if you get into such agreements, then we probably will make a step forward. I think it's very much try and error. Some of the proposals with regards to accounting changes are not really tested yet. I think there's a fair amount of pushback, at least in my industry, in the insurance sector, in terms of how far one can go and should go. And over time, we will have to calibrate that. The devil is in the detail, and we will together have to sort it out. Together meaning private sector, public sector, and really avoid the risk that we go into sort of opposing directions.
Gentlemen, right in the front row. Please wait for the microphone, which is coming. And then somewhere in the middle there. Yeah. Please identify yourself. And,
Thank you. From Oriental Morning Post in Shanghai. My question is to Mr. Zhu and Martin about Basel III. As we know, the Basel III will be present to Seoul G20 Leaders Summit in November. Will it be passed? As we taking into the account of the implementation of Basel III will affect the profitability of all the banks. What's the risk we will face? Is it the sooner the better, or under what conditions? Thank you.
I didn't entirely catch that, but I think it's on implementation of Basel III.
Yeah, I think I got it because I'm a Chinese. I can understand his Chinese English. So let me answer first.
I'm glad you said that, actually, rather than...
We understand that Basel III, was passed in the committee yesterday, and promote a few things. The first issue is obvious, the capital standards. The second issue is the capital quality. The third issue is the liquidity measures, short-term and long-term. And the fourth, obvious, the leverages. But Basel III is more than that. It's a lot of context within the Basel. I think that's the first thing. I think it's good for Basel to set up the standard for the international financial sector so everybody can follow. I think that's the good thing. But the second issue is not easy for everyone to follow the Basel because everyone in the very different stages.
Right.
And I'm not saying the advanced emerging market, even within the advanced. For example, in the capital ratio in Asia, the Asia financial sector has a much, much high tier one capital ratios than anyone else in the world today, right? And so it's very different. It will take some time for the banks to move in together. And the Basel III do give the space for the country to catch up a few years. And American even say they will not implement the Basel III in the certain years, specifies in the Dow-Franco bill as well. So there's a space and sort of let everybody to catch it up. I think that's give a certain variation for the different standard. Now, which is good, but which is also concerns. The good things, because everybody in the different stages, everybody can adapt the system gradually. But concerns, because if everybody apply for different level in the same time, it may cause international arbitrary and regulatory frameworks, right? So there's also concerns. How do we mimic on those issues? I think we need a further discussion on that. Now, when we come back to your question, the implementation and really the impact on the financial sector, I will say the few things obviously very clear. Number one, will impact on the financial sector, the business model. And because, for example, trading before take little capital, but today you have to take a counterparty risk into the consideration. You have to take capital, put the capital on it, and also for the long-term loans, you have to put the contingent capital, sort of counter-cyclical things, you have to put them in. So the capital mechanism at capital location can be very different, and obviously will change your business model as well.
Right.
I think this is very important. And obviously, because you need more capital, your ROE will be impacted. But how much impact is very different, depends on your business models. And also because quite a few banks may not necessarily meet the Basel III condition today, so they may need to raise money from the market. So we will see market can be quite active because a lot of financial sector raises further money from the market, which is very much a good news.
I think
enhance the financial sector.
I think a leading bank sort of actually said that last night. Actually, if I read
So we will see. But to go back to your fundamental issues, I would think standard is there. The implementation can take time. The market impact is clearly there, but it will take time. At this moment, we're still in the process to closely observe how things will change, because even the Basel III's principles need to further adapt the different environments and improve itself in the near future.
Let's get a couple more questions in. Gentleman right in the middle here, grey shirt, and then lady immediately over there. I'll take two questions, actually, and then...
My name is Mark Zawadzki. I work for the Russian business magazine Expert as Chief Asia Correspondent. I'd like to refer to a remark by Mr. Tsui on that 90% of countries are not represented at G20. I think that what we've seen over the past 2 years is China more and more willing to represent those underrepresented, to speak for those unprivileged countries. So, and especially that was like obvious at Copenhagen talks, I think, last December. So my question is, first question for two Chinese members of the panel. Is it true? Is it a right observation that China is willing to speak for undeveloped world? And my second question is for the three other panelists. Will other countries accept it? Thank you.
And then let's take another question here.
Wei from China Central Television. I would like to address this question to the two ministers from Asia, Minister Cui from China and Minister Pangestu from Indonesia. Both of you mentioned about your worries of the reality in pushing forward the IMF reform, for example. But the thing is, whether your countries, developing country within the G20, have a box of tools to push forward this process. That's what a lot of people here in Asia are thinking about. And I hope, Mr. Zhu, if you can also jump on this question. Thank you very much.
Of course, I will not jump.
Yeah. Okay. Do you want to go? Marie, do you want to start?
Maria?
Regarding representation of those developing countries that are not members of G20. I would say that many of the countries, developing countries, emerging economies which are members of G20 will, in their own way, be representing their group of developing countries. It's not exclusively, I think, the role of China. And what will happen and has happened, say Indonesia is representing Southeast Asia, we do talk to our Southeast Asian economies to find out, okay, we're discussing this particular issue in the G20. Do you have any input? We have this process within ASEAN. And Indonesia is also members of other developing country groupings. Say in the trade arena, we are members of G33 and so on. So I think it's not exclusively will be for China. It will be led by other developing countries and developing countries per se as emerging economies will also get together on various issues such as, say, on the development agenda. I think there's a great deal of convergence on how we view the development agenda within G20 and how to best represent developing country interests in G20. And I think Korea, Seoul being host this year is very important to get this on the agenda. And I think the Koreans have done, I would say, a very exemplary job in doing this outreach. They have done a lot of outreach activity. And this will actually be one of the true tests of the effectiveness of G20 in my view. And so how do you channel the views of developing countries into the process? I think the second question was related to do we have a box of tools to push? Is it the IMF reforms specifically or in general? IMF reforms in particular. Well, I think it's better left to others, but I would say for us, what we think is important is if we collectively as developing countries and especially the emerging Asian countries and other emerging economies which should have a greater voice within the IMF, not just the quota, but also the governance. We need to also push and have a greater voice. We don't have a toolbox, but I think we do have a greater say and we should make our opinions known. And going back again to what we think is very important as Indonesia and Korea and a number of other countries, I think China similarly, the global financial safety net, which is a very important aspect of what we are dealing with in the development issues. Having emerging economies, we feel countries like Korea and Indonesia were punished a little bit unfairly during the 2008 global financial crisis. We were doing very well, we were doing all the right things according to the so-called Washington consensus perhaps. But yet when the financial crisis happened, because there was this huge capital outflow, we still got affected. So this global financial safety net is kind of the second line of defense to help us, such countries in future, from not being punished unfairly by the crisis. And it's very important aspect because the IMF in the 97-98 crisis played a rather different role, let's say.
Very diplomatic. Very diplomatic.
I was in China, it's okay.
Very.
And for countries like Korea and Indonesia, going back to the IMF, even if it's a second line of defense, is very politically sensitive. So it's going to have to be a totally different facility, not with the kind of conditionalities and advice that actually led us to a deeper crisis in 97, 98. That's kind of where we will push for the reforms in the IMF.
Minister Tiankai, do you want to come in?
I think what we are witnessing today in the world is a historic trend, historic phenomenon, which is the rise of the developing countries as a group.
Right.
I don't think we should put too much focus on the individual countries, country like China. Because China, of course, China has a very huge population and it could attract a lot of attention internationally. But if we look at the world, we could see the rise of a number of developing countries. Not only China, but also Indonesia, India, Brazil, South Africa, and others. And also, greater and greater role played by regional groupings of developing countries, like the ASEAN countries. I think if we put all this together, this is a historic development. This is a development towards a more equitable, more balanced world governance, and we should certainly welcome that. And we should consider the reform of the international financial institutions against this background. That's why we stress the need to complete the quota reform of the IMF.
Right.
But we also believe we need governance reform of the fund. But the quota reform will provide the very basis for further reform of the fund.
Tony, you wanted to come in with a quick
Very
I think
quick-
last comment, actually.
Very
yeah.
quickly, and not to be the skunk at the garden party, but let me just focus in on the G20 and just hopefully state the obvious, which is that the G20 is not the UN General Assembly.
Right.
So for those who expect that the G20 is going to perfectly represent 195 or 205 nation states or whatever we're up to now, I don't think that's realistic. I think they are the top 20 economies, and hopefully they, in enlightened self-interest, come to conclusions that help the world economy, but it's not the UN General Assembly.
Thank you very much. Tony Clement, just spoken, Tiankai, Jumin, Marie Pangestu, Martin Senn. I think they've done a tremendous job at covering an enormous amount of